finally, I've come back to Malaysia to do a recording. But usually when I come, this kind of news always happen, right? And this time we are going to talk about the UOB One Account Nerf and what are some alternatives that you can consider. Now, if you haven't heard, I've already announced on my Telegram group and other social media channels that starting from 1st September 2025, the UOB One account interest will be reduced to 2.5% per annum if you just fulfill the salary credit and the credit card spend requirements. And this was a big drop compared to the previous 3.3% on the first $150,000 of savings. And I know that a lot of you will be very sad with this news because you all have been using UOB One either for the UOB Tax Saver or the Nation of Savers Bonanza campaign, which is the quarterly earmark savings promo. And I have really warned and make multiple notices over time that if you decide to lock your funds for this savings bonanza or the UOB Tax Saver, you need to be aware that if one day UOB One changes the interest rates, you will be tied down with it. And this is exactly what has happened. So I'm not surprised that this change has come, even though it's a bad change, but we all know and anticipate that this is going to come one day, and you should not be surprised with the lower interest rates. And of course, if you miss this news, means you're not in my Telegram group, so you should go and join 21,000 over members in the Honey Money SG Telegram group to get notice of the real updates right there. Join us at Honey Money SG. Now, so after announcing the nerf and all the bad news, are there any other good alternatives? And I could tell you honestly that there's not much good alternatives anymore. Even if you look at the closest competitor, OCBC 360, it has even announced the nerf even earlier. Like from 1st August onwards, if you just do a salary credit, a save, and the spend criteria, you will only get 2.45% per annum, which even now is still lower than UOB One account. 2.45% per annum is like no big deal, You rather just put in CPF OA and, use it for housing. 2.5% per annum in OA is already higher than 2.45% per annum in OCBC 360. And the fact is that I haven't included the additional 1% per annum interest which you can get on your combined CPF balances of up to $60,000. So you see, in the past I always talk about CPF is where you can put money, right? People don't believe and keep shutting down, and I told you this kind of trend will happen sooner or later. So I wouldn't recommend OCBC 360 over UOB One. I think they are around the same level depending on whether you have 100k or 150k. But another closer competitor, I think it's worth a shot, is the Standard Chartered Bonus Saver account. I went through in a previous video comparing UOB One account with SC Bonus Saver account, because SC Bonus Saver account, the requirements, although it is slightly tougher than UOB One, but you get an effective 3.05% if you just fulfill the salary credit and the spend criteria on your bonus saver card. And let's go through briefly the criteria. So you will need $3,000 of salary credit transfer from your company bank account to your Standard Chartered Bonus Saver account. Of course, there are some accounts that say that they can do personal transfers. I don't know, I cannot verify, but the fact is that you need to do salary $3,000 transfer plus $1,000 spent on the bonus saver credit or debit card. This one has to be applied during your application for the bonus saver. And in fact, the good thing about Standard Chartered Bonus Saver is that they have new user sign up bonus. Depending on when you apply, go and check the latest terms and conditions. And it's one of the rare few accounts that still give you welcome rewards for new users, as long as you have not cancelled or held any Standard Chartered Bonus Saver account in the past 12 months. So to be clear, if you hold their credit cards, if you hold other accounts like eSaver, you are still eligible for the Bonus Saver welcome rewards. So you can use my link to sign up if you're interested. But what I really like about Standard Chartered Bonus Saver is that they apply a flat rate. There is no tiered interest rates, which means if you fulfill the criteria, even if your AUM, your monthly average balance is like $50,000, it will still get 3.05% per annum. So that is quite different from how UOB One account calculates the interest. So I would say that if you really want like bank account nature, it's worth looking at Standard Chartered Bonus Saver right now and see whether it fits your criteria at 3.05% per annum. But for myself specifically, I'm not really looking into all these corporate salary transfers kind of bank accounts anymore, because firstly, my cash level is not that high, so it won't hit like the 100k kind of level. What I'm still doing right now is the HSBC Everyday Global account, which is what I'm always mentioned, the ding dong strategy. You need to transfer from one person's HSBC EJ account and then to another person's HSBC EJ account. Of course, in the middle, you will need an intermediary account to kind of cleanse out the account nature But if you don't know what I'm saying, just ask in the Telegram group. All right, and HSBC EGA is still not bad. Right now, in the month of August, it's giving 2.5% per annum if you have a wealth holding. And it's not difficult to have a wealth holding. Just go and invest like, the minimum SGX stock requirement, and you are considered to have a wealth holding. And I recently checked from HSBC pricing is that there is no minimum commission at 0.15%. So that's like great news. Then if you couple the additional 1% per annum coming from the incremental savings of the Everyday Plus Rewards program, you are looking at 2.5% per annum at 1% per annum, which equates to 3.5% per annum on your total HSBC EGA incremental balance compared to the reference month, which is July. So after August, you will have to transfer it out to another HSBC EGA to continue this kind of trend because it only lasts from August to September. And if you want that 1% additional, you will need to transfer it out. This is all covered in my Ling Tong strategy. If you're unfamiliar, go and search like the OCBC versus HSBC EGA account. I think I did a video detailing what is that strategy. So having said that, most of my liquid funds are still placed in the HSBC Everyday Global account. Like if sometimes I want to transfer to my broker, I will take it from my EGA, or sometimes I have some larger spending and pay my credit card bills, I will also direct it out from my HSBC EGA. But those are really just for my liquid funds. And if you want to look at where are my bulk cash holdings, I consider them to be fixed income bond nature to just give some passive returns. I would say most of them are still in bond funds or money market funds. Now, one good example is the recent UOB Smart Promotion, where new and existing users can qualify for 12% per annum to participate in the SG60 promotion. So if you don't have a UOB Smart account, you can sign up for one using my link and check whether your account is eligible to participate in my promotion. But if you don't have a UOB Smart account yet, you can always sign up for a new one and then get some welcome rewards if you fulfill the terms and conditions. You all know the trading platform and the brokerage, all about the same one. Just deposit, trade, and hold some requirements. Make sure you refer to the T and Cs on how much you are needed and how long it's needed to hold and how many trades you need to do. You all know the standard procedure. Another trading platform with new user rewards, that will be Longbridge, because they are extending the 6% per annum coupon times 2, okay, which means you get up to 12% per annum for a new user. So all you have to do is just deposit $2,000, make some buy trades on stocks or ETF, because a lot of people has asked me whether bond funds, whether money market funds all qualify, but only stocks or ETF. You just buy one unit of ETF, multiply by the number of trades you need to do, and you fulfill the criteria. Just hold the funds there, don't do anything, and you can get up to 12% per annum on their money market fund that is denoted in the Longbridge Cash Plus. So yes, I think Longbridge welcome offer. You can also get some free shares like half an Nvidia share or one Apple share, or one Nvidia, one Apple, one Google, one eBay. That's the latest promotion, which is worth up to $800 if you have that deposit criteria, which is $100,000. I mean, since you are coming from UOB One account or OCBC 360 account, some of you will have $100,000 to park inside. And just to be very clear and transparent, Longbridge is regulated and licensed by the Monetary Authority of Singapore, MAS, so they cannot do anything funny with your funds. It's a regulated and licensed trading platform. And I can tell you that once you put money in a brokerage platform, it is much harder to scam your money out of a bank account. Because bank account, people just ask you to transfer, you blur, you will transfer. Longbridge or UOB Smart or any other kind of trading platforms, they will ask you repeated questions and passwords and the appropriate anti-money laundering things to make sure you are transferring to the right person. So there's a layer of security above that. But if money market funds is not your thing, then you can do what I'm doing right now, which is short-term bond funds. So what I invested is called short-term bond funds. Basically, there are a number of bonds bundled into a product. You can think of it like an ETF of bonds, but it's not really an ETF, okay? It's called a bond fund, which is considered much more diversified than a single bond, which means there's a diversification of risk. And right now, I'm buying into bond funds on 2 platforms. One of it is Longbridge, which I just mentioned, and the other is on Moomoo. So you can look at my respective returns for the past few weeks, and in fact, I've been getting positive returns, even higher than what is stated right there, because bond funds are on a rising trend as interest rates drop. Bond NAV tend to increase. That's the general trend, because bond price, it has an inverse relationship with interest rates. So I'm hedging on this relationship. As long as interest rates continue to fall or trend to fall, bond prices will tend to increase, which is why I'm investing a part of money inside of it. Our money market funds is quite different. Now, money market funds will follow interest rates. If interest rates fall, money market fund returns will fall in the same trend as well. So I do not want to put too much inside money market funds. And as of now, I will declare that I have zero T-bill or zero SSB holdings right now, because T-bill is quite obvious. There's no good return on it. It's like less than 2% per annum. I would say don't waste time for just 6 months. SSB, I feel that even in the long term, if interest rates are low, I think it's time to invest in the market. And if interest rates are high, then there are other places better than SSB. So that's for me. I don't think SSB is a good place for me right now, considering my age range, the 30 plus range. I would say if you are 50s or 60s, SSB will make total sense because you're nearing retiring mode. So you don't want to have so much funds in all the higher risk investment products that you may not be able to comprehend. But anyway, that's just my personal take. There's not financial advice, because you will need to assess your own situation to determine the best course of action for yourself. Therefore, if you ask me how much cash savings emergency buffer should I have, I would say that a good 6 to 12 months buffer of your daily expenses plus whatever fixed expenses that you are looking at. For example, mortgage or town council fees, all these that are fixed outflows that you will have to pay no matter what. Collate it under a total monthly budget multiplied by 6 or 12 depending on your appetite. Then that should be your safety buffer. And for me, that is around $70,000 to $80,000. I think that's a comfortable cash range that I can accept. But different people have different appetite for risk and cash. So just allocate to what you're comfortable with. Alright, and just to be clear, this video has no sponsor at all, because I want to be objective, and because I'm listing so many platforms, I cannot just put in another sponsor, right? But what I can safely tell you is that I'm still using Interactive Brokers as my main broker to buy and trade US stocks, ETFs for the long term, right? I just invest using Interactive Brokers, and if you're interested, you can just click on this Interactive Brokers link or scan the QR code right here to support the channel. No cost needed, okay? If you don't want to invest, you don't need to sign up, okay? You just click. That will be a great support from you, and I will thank you from the bottom of my heart. Also, just an announcement on live stream every middle of the month, usually between the 14th to 16th calendar day on a Wednesday. I will try to do a live stream to update the latest cash and savings and interest rates and the best returns on my Wednesday 9 PM live stream. And the last one I did, it was right here. So you can refer to what are the avenues mentioned for you to park your cash for the highest returns right here.